Welcome. We are back. What's up, Medi, Danny, Jack, Nerve, Zeke, Hoop Around It, Max, Pleberate, IME, I Repair, Mind War in the chat. What's going on? Jack saying it's 1 a.m. and I'm still at work. Oh my gosh. But on the bright side, I still get to catch the stream. 1 a.m. at work, that is crazy. Mike, what's up? All right, let's get started. Today was one of the craziest days in the market like ever. Wow. Where do we even begin? If you go back and literally look at the title from last night's stream, let me see what the exact title was. The exact title yesterday was a big move might be coming in the market. And wow, did we get a big move in both directions today. If you watched last night's stream, I talked about how we were really just kind of at this like final period where a decision kind of had to be made, and decisions were made today. We had the CPI gap down like 2% or something, closed up on the S&P 500 almost 3%, 5% intraday, 5% move intraday. This is insane for anybody who hasn't been around the market for a long time. This is so far from normal. This is the average return for the S&P 500 is like 9 or 10%. We just did half of that in a few hours today. And of course, like we're down a lot more than that throughout the course of the year. But I'm just saying the fact that the average return that funds like look for, the fact that you got that in a few hours on the S&P 500 is just, it's mind-blowing. So I'm going to talk about what all this could potentially mean. Huge bullish engulfing candle today on the S&P 500. If you watch the last couple of streams, I've been talking about how I thought we were going to go a little bit lower, which we did. At the open, we were lower. We were down 2%. We did go lower, and I talked about how I thought we'd fade a little bit more, and then we would start seeing some classic bullish divergence, the lower Bollinger Band, the volume signals, and it's kind of like we got both of those in one day. We got the move lower, and then we also got the move back up, like all together. It's crazy. And a lot of other individual stocks now have obviously been affected by this. We're going to look at some of the banks which are reporting earnings tomorrow morning. That's also going to be very important. Let's get started with Bitcoin, which has printed a bullish pin bar candle on the daily, right off the same lows from pretty much the end of September. It's holding this support zone very, very nicely. Classic bullish divergence on the 4-hour. On the daily, you have broken out. You've been consolidating. If we go over to the weekly, take a look at this. You're very close to this weekly falling wedge breakout for Bitcoin. It's kind of like the same story every night, but you just keep getting these little extra details, these little variables that just continue to pop up. And to me, it doesn't feel like things are getting worse from a technical standpoint for Bitcoin. In my opinion, things are getting better. And every single time we successfully hold this support is even more confirmation of the amount of buyers at this level and the failure of bears or sellers to bring us below this level. So we will see how this kind of unfolds. Ethereum also broke a support, but then also printed a bullish pin bar to get back above. I mean, look at the wick on this candle. That is insane. That just shows how quickly things were bought this morning. So you were well under this support zone we talked about last night at the lows in the morning, and you closed literally all the way back to where we were last night when I was on stream. So very nice move, holding support. These are the types of candles, like major lower wicked candles on crypto, a huge bullish engulfing candle on the SPY. These are the types of candles that can give you reversal, at least in the short term. So these are very important candles. The low from today is going to be a main focus point on the stream until it gets broken, if it does. So I'm just going to continue to watch that. As long as we can really hold today's lows on crypto and for stocks as well, that's a very, very good place in my opinion for risk management. So I'm going to be keeping an eye on that. Let's look at how other markets did with all of the craziness today. The US 10-year did actually make a new high of, well, let's see, the highest point for the US 10-year since April of 2010. So in over a decade, this is your highest point. You did get over 4% for a little bit today, but you did not hold it. So just like the SPY went down, but then it ended up going all the way back up, this went up, but then it went down. That makes sense. But yeah, you're still relatively in the same area as last night. The question is, you get above this area first, or do you break this trend line, this red trend line first? You know, it's really just a little bit more waiting is probably going to be needed for that. Crude oil, bullish engulfing candle today, bounced perfectly off that $85 support level, which dates back to some highs from October of last year. I think maybe you can see some more continuation out of this larger falling wedge. I'm going to kind of delete all these bear flags now until a new one is formed, which probably will be at some point. But right now, this looks pretty decent to me. And then let's move over to metals really quickly. Gold, really just not much. You know, you went up, you went down, nothing really changed there. Silver, kind of the same thing, but it did get closer towards. This is a very key area right over here for silver. It's, first of all, the demand line of this ascending broadening wedge, these red lines, and also at the same time the previous supply line of this white downsloping channel or wedge, whatever you want to call it. And then of course the dollar currency index. This is very interesting, right? Pretty much a bearish engulfing candle. On top of that, first potential lower high in a very, very long time on the daily. And if that holds, it will be a partial rise. And if this high holds and you can't break above it and you get back down to this demand line, you would have a 70% chance of this breaking down. So keeping an eye on this as well. Let's move over to the stock market now. Well, first let's look at the Hang Seng Index, which is still selling off. We've been talking about this. It's approaching a very big level. If we go over to the weekly, actually, you can see this major trend line dating back to 1998. You've had 3 major bear markets pretty much reverse off of this trend line, and you're now at it again. So if there's any time where you want to keep a close eye on how Chinese stocks do, at least in the next couple of weeks or maybe even months, because it's such a long-term line, keep an eye on to see if it can react off this level. Because if it does, I mean, just look at the percent moves you've gotten off this trend line. And of course, it was a very different market back then. But we're talking in the hundreds of percents right off this same exact trend line. You're testing it for the 4th time now. So that's a very big level that we're going to be continuing to talk about on the stream. Now let's move over to the SPY, which I really can't believe it. Just looking at this chart, it is crazy. So first things first, you have classic bullish divergence confirmed on the daily. Not much of like you really only had 2 bars on this second island, so it's not like a major island, but you have it. This is the first time you've had classic bullish divergence in a very long time. Let's see. I think since around over here. I don't think you've had classic bullish divergence on the S&P 500 since pretty much March of this year. So you have it now. It's also on your RSI. You made a higher low. If we go over to the 4-hour chart, this is pretty much classic bullish divergence too. The indicator's not picking up because of this little bar here. But you've got 4-hour classic bullish divergence. You've got that same bullish engulfing candle. We go over to the 1-hour chart. This is where things look a little bit different though. Great move. Like if we go over to the daily, it looks like you're nicely back above the important zone that we've been talking about. You closed above it. If we go over to the 1-hour, however, you're still facing some resistance heading into tomorrow. You can see this whole entire yellow zone. You have some lows back from June and July of this year. Then we have some highs from September of this year, and even a gap fill up at 373. So within the next like 2% of upside for the S&P 500, you do have some pretty heavy resistance. And with the fact that you're already 5% off your lows, like, you know, just even if we did keep going up a little bit more, then you're talking about like 6-7%. I don't think you're going to be able to get much more than that in like 2 days. So even if we do go higher tomorrow, which again, I really don't have much of an opinion going into tomorrow, but even if we did, I still would be looking out for like some sort of an intraday like channel to break down, or in some sort of rejection and a pullback heading into next week. Maybe not in the morning if we have a good morning, but I just don't think we're going to see a full day of rallying from today and then another full day of rallying into tomorrow. Maybe I'm wrong. Like if this happens tomorrow, I don't know what to say. If this happens tomorrow, we are in a very, very unique situation. So we will see. If we go down to even lower time frames on the S&P 500, you can see this 367 level being tested. There are a few highs from the past over here. You did find some resistance at that level today. If we go on to the 5-minute chart, You've got this rising wedge forming, so keep an eye on this tomorrow morning, unless there's a gap. If there's a gap, then it really doesn't mean much. But keep an eye on this. I wouldn't be surprised if we had like a little, maybe like quick rug pull at some point tomorrow, just because of how much we rallied today. But overall, if you can continue to hold this zone on the daily, which means just holding above 359, it's okay. So even if you go higher first like this and then you pull back, or if you just pull back right away, as long as you can hold this zone, not bad. If you break down from the zone again, then that's bad. But for right now, you're doing an okay job with holding it. What I want to do now is I'm actually going to go over to the SPX chart, just because this chart already has a lot of stuff on it. I'm going to go over to the SPX chart, so it's a nice fresh S&P 500 chart, and I want to chart a couple different trend lines. The first one being this. And these are trend lines you can go and chart for yourself as well. You can look at this as like a down sloping channel. You could also extend this a little bit, make it a little bit wider, and then extend this, and then look at it as a descending broadening wedge. There's a few different ways you can look at all this price action as a wedge, which is something that you should be keeping an eye on just in case you do break that supply line. I probably would prefer it like this. Let's say you break that supply line, then you've got gap fills above and everything. I mean, just to chart out some gaps on the SPX. Got that. This was pretty much filled, so you got this as well. And then all the way up over here, you got this gap. And then even like a little bit higher, there's another one as well. So a lot of gaps, you know, those are very far away. We've only rallied for really one day. I'm not really trying to get too ahead of myself here. But again, if this very well-defined low that we put in today can hold, those are the next levels to the upside, at least from like a gap fill standpoint. So keep an eye on those. Moving into other indices, we have the QQQ, which also gave us a bullish engulfing candle today, pretty much closed right at the lows from June. So it is retesting that level. This is a very key level around like 270-ish. It's your low from June, as you can see over here. It's your high back from July of 2020, and it's even a couple of lows from November of 2020. So this is a very key level for tech stocks. We are heading into tech earnings in the next couple of weeks. If we go down to the 4-hour chart, again, you can kind of start charting out these channels. Probably like this is the best way to do it for the Qs. There's your down sloping channel right there. Again, pretty much classic bullish divergence on the 4-hour. You're getting the channels, you're getting the divergence. Let's actually also look at the daily and go over to the Bollinger Bands. You pretty much hit the lower Bollinger Band. You've been kind of riding the lower Bollinger Band over here. If we go over to the SPY, you can see you really didn't touch the lower Bollinger Band, which is like the bottom of this dark cloud. You didn't really touch it until today. You kind of like opened at it and then just completely went up after hitting that level. So on top of that, what did we talk about last time on stream? Volume. High volume has signaled multiple bottoms this year, pretty much every bottom this year. Got pretty high volume today as well on the daily. So again, these are the things I was talking about. I said the last couple nights, I think we're going to go lever. We're going to go lower to a lower level. I just kind of put those two words together. But we already went lower. That's the crazy part. Like that already happened when we opened. We had already done that part. And then the second part to that was hopefully, like I was saying, we developed classic bullish divergence, lower Bollinger Bands, volume signal, all the variables I was saying that I wanted to see last night on stream for us to get kind of like a at least short-term reversal. We've actually now gotten. The only thing that's still worrying me is the fact that we already went up like 5% off the lows in one day. But to be fair, we went down 2% like out of nowhere as well because of the gap down. So if you just ignore the gap down, and if you just kind of look at it like this, right? What if we were to just forget about this part of it and just take it from here? Just because of the fact that this really you really weren't at those prices for a large amount of time. Like if you just ignore this and really you just kind of, you held the lows and then you just went higher. This is why candle close confirmation is very important, right? Because I'm sure there was a lot of stop losses triggered over here in the morning right at the open. But for those who waited for the daily candle close, it was probably a very fun day. So that's really, the majority of what I'm looking at for the market. Just can we continue to hold this low from today? This is the new swing low, I would say, I'm going to be focusing on in the market. If we look at the VIX, it's kind of back testing this supply line, which is a little bit worrying. But at the same time, on the 4-hour, it kind of looks bearish. You can see, first of all, this little double top going on right over here. So you have two pretty nice tops around 34. And then also we can kind of create this trend line. Let me clear up some stuff from the past here. And then create this like upsloping channel, which again, if you drop down to this demand line, also this second top is going to be a partial rise because you were not able to get all the way back up to the top of the channel. So if the VIX drops back down and tests this, there's going to be a 70% chance of it breaking down, which in turn means the SPY goes up pretty much. So really, the market right now is as simple as this. If you're bullish, set your alert right over here, 35-ish on the VIX. Okay, go over to the SPY, set your price alert right under today's low. As long as neither of those alerts trigger, things are okay until we get like bearish variables. But as long as neither of those alerts trigger, that is an area in which you can manage risk. And that is why, as you might have already seen, I've put out the first public swing trade in 2 months, and I'm going to be looking to put out more swing trades for the first time in a while outside of premium. So these are the levels I'm going to be hoping that we hold for the swings to play out. And you have 5% of room until they break on the SPY because you went up 5% off that low. So I'm watching that. If we move over to small caps and mid caps now, let's start off with the Russell 2000. This is interesting because of course you have another bullish engulfing candle, and we're going to look at a lot of individual charts tonight. They're all going to, not all of them, but a lot of them are going to have bullish engulfing candles. Again, a very key signal of a reversal in the trend potentially. This is also like a dragon pattern almost on the Russell 2000, where you have that supply line and then these two lows around 163. And you're very close to testing a breakout for small caps right now. So small cap breakout, because if you break above this level, not only are you going to be breaking out of this green supply line, you're also back above this blue zone, which let's go over to the weekly. Let's look at how important this blue zone is. It's everything for the Russell 2000. It's your 50% retrace from the COVID crash low to high. It's your highs from 2018. It's your highs from 2020 before the COVID crash. And then it's your lows from June of this year and your current low that you just put in. Also have a chance of getting a weekly bullish pin bar candle and triple classic bullish divergence on the weekly. So if there is any time heading into earnings in the next month for small caps for some sort of a relief rally, this could be it. And even look at this, right? This supply line right over here, you broke out of it pretty much right over here, and then you just back tested it. So it kind of also sets up that potential break hook and go stuff. These are variables that we just haven't seen in a long time. And hopefully these are the types of variables that will prevent stuff like this from happening that we talked about for fun last night on stream. That bullish bat, which is in the final wave, which could be bearish. We even looked at Apple, which had a massive one too. And thankfully Apple is bouncing here because remember we talked about multiple things here on Apple last night on the weekly. First of all, it's bouncing, kind of right now just holding this trend line that dates back to the COVID crash lows. And then also this would be the B point of a potential bearish bat, which again doesn't seem realistic to me at all, but just the fact that you're holding above it is good because if you break it, again, it sets up that bat action magnet move, which implies they move all the way down to the D point if you break under this B point, which again, because of this bounce and hopefully it holds, you're not really risking for right now. So again, I'm not trying to get too ahead of myself. It's 1 day, but this is a huge move for 1 day. So it's not even about the timing, really, in my opinion. It's more about how massive the move was. I think it really says something sentiment-wise. And also, this type of move affects the variables a lot. Again, classic bullish divergence on the weekly chart for the S&P 500. Bullish pin bar candle. This is the first bullish candle for the S&P 500 really since over here. So since like the beginning of August, this is your first, and again, this could change tomorrow. You still have 1 more day to solidify it. But if it doesn't change too much, that would be a weekly bullish pin bar candle. And then finally, the ARK ETF. It was under the 35 level for a little bit today, which is like, not literally, but from a technical standpoint, breaking 35 is like the level of death for the ARK ETF. I hate to like say it like that, but like this whole entire area in general, you break this, there's really nothing under it. This is like your lows. You break this, there's no support left for the ARK ETF. So I don't know, don't send that to Kathy Wood, I guess, but you're holding it and kind of bouncing off it for right now. This is like your base. This is like, if you were to look at this as like a house, this is like the concrete under the house. I actually really don't know how they do that, but like, or how that all works, but whatever support you have under home, this is it. And if you don't have it, it's like, based on the analogy, it could collapse. I'm not saying the ARK is going to collapse. I'm just saying like, there's nothing here if you break it. All right. I'm just trying to use as many analogies as I can to tell you how important this level is. So keep an eye on that. You did get a bounce off of it today. Again, bullish engulfing candle. Let me get all this stuff back on my chart. All right. Triple classic bullish divergence. If we go over to the 4-hour chart, you could probably draw a wedge here as well. Let's just extend this. So what are we seeing pretty much everywhere? Classic bullish divergence, bullish engulfing candles, falling wedges, broadening wedges, a bounce off of oversold RSIs, SPY hit the lower Bollinger Band on the daily. We have already passed the FOMC minutes and the CPI from this week. So heading into earnings season, again, as long as those two alerts I told you to set up don't go off, as long as that 35 on the VIX doesn't go off, and as long as that 348 on the SPY doesn't go off, I think things are looking a lot healthier technically than they were in the past few days due to this bounce. And the technicals did not imply this bounce probably, but the technicals are now healthier in my opinion because we got this bounce. So that's really it for the market analysis. I actually want to look at some bank stocks heading into their earnings tomorrow morning. I think it is pre-market. Yeah, it's pre-market. You're going to have a lot of those bank earnings. So we're going to look at some of those names again. The moves you're going to see tomorrow morning are not going to be because of the technicals. It's going to be because of whatever is in their earnings. So looking at the technicals literally the night before kind of defeats a little bit of the purpose of it. But I just want to look at like the larger picture. Take everything with a grain of salt because earnings are literally tomorrow. But let's just zoom out on these charts and see what's going on with 4 of them: JP Morgan, Morgan Stanley, Citibank, and then Wells Fargo. Let me take a look at the chat for a second here first though. And hit the like button if you did not already. And he says, can you show your major levels for the QQQ? It's pretty much these. Those are pretty much the major levels I have. Matt G, what's up? How you doing? We will be looking at CLOV in a little bit. Glad to see you in chat. IMEI Repair says $500 on SPX could have given you 100,000 plus in calls. Crazy. The wick on Ethereum is insane. Very huge wick on the daily candle for Ethereum today. GS Strategy says quite a bit. Let's see. There was the 5th largest intraday reversal from a low in the history of the S&P 500. That's how crazy we're talking. That is insane. It was the 4th largest in history of the NASDAQ. Also check the top 10 reversal of the NASDAQ all happened during a recession. None marked the bottom. I loaded up on $100,000 worth of SPY puts today. I predict the next 8 days will be very, very bad. The low will be broken on the next down day. So yeah, this is a different opinion. Again, like my opinion is not the fact that we're going to hold the lows for sure. My opinion is mainly I hope we hold the lows. I don't know if we're going to hold them. But yeah, those are some interesting facts. Thank you. Gold Miner saying not going to be able to stay long, but popping to say hey, appreciate it. What's up, Maxime? Let's see what else. GS saying I disagree, chart's not healthy. It's all good. I have no problem with people disagreeing. I welcome different opinions. I'm not always right. Zeke says variables for both sides always. I think there's a good argument for a short-term rally. And again, like I said, we're up 5% off the lows just today alone. If you watch like the short-term segment of the market, I still said like we're approaching resistance. We looked at this on the 1-hour chart. So my predictions going into tomorrow are nothing. everything I was talking about from a technical standpoint is based on the fact that we actually have classic bullish divergence on multiple time frames. This is a textbook bullish engulfing candle. Over here, we got nice volume. It's all of those things. But I do understand it's, you know, it's a huge rally for one day. I even drew this out like earlier in the stream. Pulling back is very, very possible. I just hope that we hold this zone if we do pull back. And again, I'm not saying I know we're going to hold it. I just hope we do. That's all I'm saying. And appreciate it. Okay, take care, champ. Keep up the great streams. Thank you. And again, if anybody ever, you know, thinks differently, please drop it in the chat. I like to see what everybody else is thinking. I don't know the future. I just try my best. Me Tenderfoot says nothing of bearish catastrophic significance is likely to play out until January 2023. I don't disagree with you at all with the timing. So yeah, and overall, if you've watched like my last like 10 streams, they've all pretty much been bearish. It's just today I'm seeing a shift that took place that I didn't even predict really. It's just something that happened and it's kind of affecting the variables that I look at on my charts. So I'm just really talking about that. So with all that being said, I think I read most of the messages in the chat. Let's look at these bank stocks going into tomorrow. I'm just going to probably chart the bigger levels. You know, obviously nothing I really do right now is going to indicate if they're going to go up or down on earnings. But just from like a larger picture, even if we go over to the weekly, JP Morgan, since the COVID crash, has made about a 75-ish% retrace, it looks like. And it actually filled this, it gapped up a lot on the week of November 9th, 2020. It filled that gap in the last couple of weeks. So this kind of 104 level is very key. You can see it's this gap fill, it's your recent lows, and it's also some of these lows from 2018 and 2019. So 104 is a huge level for JPM going into earnings. You know, MACD is getting closer to green. Another one which is like this very long-term down sloping channel. It's not even close to breaking out of it for right now. So very key level here to keep an eye on going into tomorrow, just in general. Let's see. Morgan Stanley, let's go back over to the weekly chart. I think this, it's not, I mean, it's a lot higher. So we just looked at JPM, which was down like made like a 75% retrace from the COVID crash lows to all-time highs. Morgan Stanley's only made about a 38% retrace, so it's much higher. It's not really at a major level. You know, it kind of had like a little bit of, I guess, like a bull flag over here. Went up a little bit, didn't really do too much, but again, it's going to be really interesting to see if we could get these bullish pin bars on the weekly tomorrow, not only on these banks, but even on the SPY. Like, if we can just hold at least like a decent amount of today's gains, we could even pull back maybe like 1% tomorrow and still get these candles. Don't quote me on it. I'll have to see what it looks like at the close tomorrow, but we still could pull back a little bit more and still get these candles because of the amount of work that was done today by the bulls, or the bears closing shorts, who knows. But yeah, bullish engulfing candle there as well. Maybe like a new shorter term wedge forming. Again, earnings are going to be the major decision or deciding factor for the short term especially, but big wedge, little wedge, that's pretty much the chart. Then we've got Citigroup. Again, let's look back to 2020. Very, very different. It looks like Morgan Stanley is really just up there. Morgan Stanley made like a 38% retrace. JPM made like a 70-something%. And same thing for Citigroup. So much lower compared to where Morgan Stanley is Fibonacci wise from the COVID crash lows. In terms of like a bigger level, you're actually pretty much right at one. It's a bit lower over here, pretty much around $40. It's like this low from 2013 after the COVID crash, and then November, and then like right now. So this is a very key level. We like really zoom out here. Oh my gosh, this is crazy. Wow, I've never looked at this like zoomed in on the weekly. It's like you had 2008 Great Recession, and it's just been one gigantic. This is kind of scary, honestly. It's like one huge bear flag. And we have all these macro concerns happening right now. And you've just got Citigroup, which is just one huge bear flag. We had, our recession 14 years ago. We've been bear flagging ever since, and now we're kind of entering like a new recession. I know there's people using different definitions of whether we are or not, but let's just say for the sake of this chart, we are. And pretty much in between the two recessions, you had a huge bear flag, and just imagine earnings don't go too well, blah blah blah. Like, all right, hopefully it doesn't go into the negatives. I didn't really look at the right side of the scale, but like that's pretty scary. It's just like the whole entire chart from like the last like decade and a half. It's like a bear flag. But more shorter term, that's, you know, we're just looking at all those things for fun when we zoom out that far. More shorter term, it did kind of break out of this little supply line today, of this, you know, downsloping channel or wedge. And then we have Wells Fargo. Let's take a look at this one from a Fibonacci retrace standpoint. So these are the lows. Wow, the lows took some time. It didn't really recover in like April, May as a lot of other stocks did. It really took till like October for this to bottom out. And it's about a 50% retrace. So in terms of which one retraced the most, let me just kind of look at it like this. It seems it is Citigroup. 886. So it looks like in order of the least amount of retrace from the COVID, like in order of which one from a Fibonacci standpoint has dropped the least amount, it goes like Morgan Stanley, Wells Fargo, JPM, Citi. And then, you know, we talked about some of those bigger levels. So those are just like rough looks at the charts going into their earnings tomorrow, just to kind of get an update on how those banks are looking from a technical standpoint. We will see what they're doing from a fundamental standpoint tomorrow morning, at least in the last quarter or so, and what they think about the next however many. So we'll leave it at that. Now let's move into the new swing. This is the first swing I've alerted outside of premium in 2.5 months. It's Tesla. So let me talk about why I alerted this as a swing trade today. Of course, it's not financial advice and it has a chance of failing. The stop loss is 202.47. If it does, the reason I place a stop loss there is because you can see of multiple lows right off this support level. If it breaks it, the trade's failed. So we're gonna start off with the stop loss and the targets. I put the first target pretty much just under this resistance at 252. Second target is this gap fill from like October 3rd or October 4th. And then third target are these highs from a couple months back. And yeah, Tesla has dropped like 30-something% in about like a month and a half, 34% in a month and a half. It got a bounce right off the support that we were talking about last night on stream this morning. This is also, you know, you could already pretty much argue that this bullish bat played out because you went up and even exceeded the B point of the bullish bat, but you never really had like the full move all the way up to the top of it. So it's like you had like the first kind of move play out. You really hit that B point a little bit higher. Now it's kind of back down at that 886 level. So it's like, you know, I'm not even targeting that, but I'm just saying like, you know, maybe it holds that again. You already got a major reversal off this exact level. So I'm just hoping that it happens again. Even without the bullish bat over here, just the fact that it's at an 88% retrace from this March 2021 low is something I'm keeping an eye on. And this 207 level dates back to these lows from July of 2021. So you can see the reason I'm putting this out is not because there's a certainty that Tesla's going to continue to reverse off this level. Just the fact that it has held this level every single time it's tested it for the last year and like 3 or 4 months. So just the fact that it's held it for like 15, 16 months. And I'm just hoping that it can continue to do the same thing in some for the last 15, 16 months. And if it doesn't, it is what it is. 8% loss, at your own risk, not financial advice. But those are some of the variables. Of course, there is also the bullish engulfing candle from today. And then the fact that ignoring this little like blimp of being oversold, it's really your first time you are oversold since March of 2021, which again was kind of around, not even there, back over here around the same prices. And you can see the type of reversal you got here. So again, just if we just really zoom out here, off this level, you've already gotten multiple huge reversals. So I'm just kind of hoping that the same thing happens again. So that's it. The first swing that I've really shared outside of premium in a long time. Those are the reasons behind it. Hopefully it works out. Even if we go over to the 4-hour, you just broke out of this down sloping channel that you've been in since the end of September. So for the last couple of weeks, really, just broke out of that. And you're back above these lows, or you pretty much bounced off them. So that's what I'm looking at on Tesla. Earnings are in about a week, a little bit less than that, in 6 days. So obviously that can affect things in either way, hopefully in a good way. But we will see what happens. That is the newest swing and the only swing currently that I've shared outside of premium, but look for more. And this is just going to be a little hint on the stream, potentially a Bitcoin one, maybe like tomorrow, because of everything I talked about in the beginning of the stream when I talked about Bitcoin. So yeah, I think like I put out like another Bitcoin swing. I think it might even hit the target. Like it was like this move pretty much. I like the first target and that was it. But I might put out like a very aggressive swing on Bitcoin. Like I don't know exactly what it's going to be, but like stop under all of these lows because it's held it since June. It's only gonna be like a 10%. And then like, you know, I don't know what the first target's gonna be, but one of the targets is probably gonna go back up to like 28K. That itself is a full reward to risk. So that's probably coming soon. And then some other stocks I'm keeping an eye on, but I'm gonna reveal them later. I also want to see how we kind of like, it's good to have this one good day, but follow through price action is very important. So even if it's not tomorrow, I want to see if we can get some more follow through price action, and really more importantly, get back above this zone that I am worried about, which I talked about earlier on the SPY, this whole entire zone. Yes, you did a great job rallying today, but you're still under that huge zone and you're really only barely back above the major support for the SPY. So I need more time to really see how this is like digested by the market. This one day, the amount of move we got in one day is good, but it's only one day at the end of the day. So that's Tesla. Let's look at CLOV and Fisker really quickly. They were up a little bit today. CLOV yet again bounced right off that 150 level. It's retesting the breakout of this wedge. If you go over to the 4-hour chart, it's kind of already like, I mean, you could extend it like this and it's not even close, but if you align it to this high over here and these highs, like the reason I don't want to look at it like this, which is a more conservative approach, you know, because it's really like you have to be breaking out at that point if you're breaking that line. Thing is, you only have like 2 touches, and you have this touch and then this touch. But if we move it just like this, then you have 1, 2, kind of 3, 4, 5, 6 touches. So you just get a lot more touches off that supply line. So it's really like this. Can you continue to hold this support and then get the breakout, which you're kind of already testing off that level? And then $2 is going to be the key test because that was a major support multiple times earlier this year. So again, you're not out of the woods. Even if you do break out and start reversing here, like 2 is the resistance. 2 is the big level. Even if we go over to the weekly, if you want to have any argument for white coffee accumulation, even on like the daily, which I kind of charted before, you got to get back above 2, and hopefully you would do it quickly. So you need like a very big rally off this breakout to do that. Because on a spring, it should be quick. It should be quick. It's still possible, but it has to happen like now. Again, with a lot of things I'm saying, it's not me predicting that it's going to happen. I don't know. I really don't know. It's just me saying for it to happen, you need the move to come in. And that's how a lot of this works. Lagging indicators, lagging patterns. It's hard to tell until it happens, which is why risk management is so important. I'm looking for, why is it not loading right now? Here we go. So, you know, I've shared this on the stream a couple weeks back, and it really doesn't mean much until you get a lot more confirmation, but for it to even happen in the first place, you want to get this move sooner rather than later. And I'm not going to do like the whole entire thing of like trying to line this up perfectly right now. It's just going to take too much time, but you get the whole entire idea of it. Like spring part should be quick. So that is CLOV. MACD is very close to crossing green for the first time since August 17th. So in about 2 months, you're about to have a green MACD for the first time. It's probably going to happen even if you continue to go sideways. It should just naturally move over to green. So keep an eye out for that as well. And then Fisker, got the bullish pin bar candle yesterday. You got the bullish engulfing candle today. If we go over to the 4 hour, that's kind of right off the demand line of this wedge. We've got 4 hour and daily classic bullish divergence. I'm not just making up these variables because these are like 2 of the stocks that are, you know, I've been around on this channel and on my streams and everything for a long time. The variables are literally there, and it's not just on CLOV and Fisker. It's just the fact that we're looking at them. You can find these same exact variables on a lot of charts right now. All right, and if you've been watching the streams for a long time, what I love is when pretty much like all the stocks we look at look the same. When they all have the same variables, either bearish or bullish, it just makes my job a lot easier. When things are confusing is when like half of them look bearish, half of them look bullish. Right now, it's like on the variables I use in my system, but literally from yesterday to today, so many of the charts flipped over back to bullish. And I didn't even expect for that to happen. It just did. So hopefully you can develop some support. It's good to have the divergence and the wedge and everything. But like I was saying earlier in the week, I would like to see it develop some sort of a support, because even if it did start rallying straight up, then they could turn into a bear flag, which I would be worried about. So I would like to see some like consolidation, maybe a back test if you eventually break out, like healthy moves up, not just like a dead cat bounce springing up and then back down. You know what I'm saying? So that's really what I'm looking at, not just for Fisker, but for a lot of these mid caps in general. But the variables are really starting to appear. So if they can really hold for a couple more days and that this doesn't turn right into a bear flag, then again, look for swings on a lot of these types of names that I just haven't put out in literally months for good reason, because a lot of them pretty much would have failed if I did. So that's Fisker. I was gonna just run through other stocks on my watch list, but I want to look at whatever all of you want to look at. So what we'll do, take a request instead of me just going through whatever I wanted to talk about. So for like the 30 of you watching right now, if you want me to look at a chart for you, drop it in the chat. Nothing I say is financial advice, and take everything with a grain of salt because this is a very crazy market. Matt G says, are there percent you generally have a feeling for on swing trades? Like, got a typical triple bullish divergence descending wedge. I really don't know what that question means, to be honest. What do you mean by are there a percent you generally have a feeling for? Like, elaborate on that a little bit for me, please. If anybody's just joining in, feel free to request a chart that you want me to look at for you in the chat. All right, RMBL. You're at support. You can see this is a very big level, 1430-ish. We've got this low over here, this high over here, these highs over here, these lows over here, and then this most recent low. Huge level. You got hidden bullish divergence on the daily. This might be a bullish bat. I don't know. Doesn't look perfect, but let's see. It's pretty close to a bullish bat. Yeah, I'd say I'd honestly say you could call it a bullish bat. So you've got a bullish bat with hidden bullish divergence at support. That's good. You could probably draw a wedge out over here too, which you're breaking out of. These are a bunch of variables. I have no clue what this is. Maybe if I did, I would put out a swing on it. Also, I need to see how the market does for the next couple of days. But these are the types of charts from a technical standpoint that I look to put out swings on. So I like this request quite a bit. You know, I don't know what the company is, but from a technical standpoint, from like a first view of this, it looks like a good area for clear risk management. Again, just because something has variables doesn't mean for sure it's going to go up, but it just gives you an area in which you can manage your risk if things don't go your way. And if they do go your way, make a lot more profit than what you're potentially risking on the trade, percent-wise or even dollar-wise, or both pretty much. I'm going to get back to that question in a second, Matt. I just want to keep going with these ticker requests. SWN, like, broke under the 200 moving average, got back above it, bounced off of it today, bullish engulfing candle. There's a lot of different ways you can view this. One way is like this broadening wedge. Another way would be like this falling wedge. I just think overall it's just consolidation. I wouldn't overcomplicate it. It's in a period of consolidation right now. Overall, the trend is your friend. It's kind of outperformed a lot of other assets in the past year. I do like how it's holding $6. Look at this level. It was resistance in 2018, 2021, and now it's flipped into support. So as long as you can continue holding 6, that's a very healthy. It's kind of like a complex inverse head and shoulders. And now you kind of are back testing the breakout of it. I mean, you kind of already had it play out over here, and now you're just trying to flip that neckline back into a support. So it's interesting. Rumble is a social media platform that Andrew Tate switched over to. Okay, I heard about that. Like, I've heard about Rumble because of that situation. I've never used it, and I still don't know anything about their company, but thank you. I didn't know that. He's a part owner. That's interesting. Kelly criteria requires both risk reward and percent, so I'm just trying to figure out if you have a probability on swing trades. I don't know, maybe for premium members, just a guess. I'm just not understanding it. Again, these are terms that you understand that I don't, so I'm not saying like what you're saying is wrong. I'm just saying I literally just don't understand like the concept that you're bringing towards me right now, if that makes sense. I just don't understand what you mean by the percent probability on the swing trades. Like, do I have like certain swing trades I feel like there's like a 70% chance of them playing out, and then other swing trades I feel like there's like an 80% chance of them playing out? Is that what you're asking me? Or are you asking about like the percent return from the swing trade and how much that matters, and like how I do my targets? So the first one, I assume. I look at them very generally. I can never put an exact number. This swing trade is going to play out with the 85% probability. I can never put an exact number on it, but I certainly do feel like there's like, and True Trading Group uses this kind of classification system as well. I watch their live streams. Like, there's different types of setups. There's grade A setups, which are the setups where you have like pretty much all the variables you could look for. The levels are very clear. Maybe some news aligns with your sentiment on the stock technicals. So there's the grade A setups, and there's the grade B setups where it's like you have some of the variables, not all of them, but it still could happen. Then there's like the C setups where it's just like you only have a couple variables, but it's at like a strong level. Like, there's definitely classes of charts in which like I feel more confident in, but I can't put an exact percentage on it. And also, you can have C setups do better than an A setup, just because a lot of this is kind of not random, but the variables don't always directly impact how much the stock moves. It just can help you identify whether the stock is going to move in your direction or not. The reason that you always want to prefer those A setups over the C setups is because there's hopefully a higher probability if you have a good system. And also, the reason, and vice versa, the reason that C setups you can still sometimes trade is because it's like a good reward to risk, right? Like, you can have a stock where the chart has like no variables at all, but it's coming down to a level, and I'm trying to think of a really good example I can use. We can do this. We can use ARK right now. So if we take a look at the ARK chart right now, we just go over to the weekly. So let's say that there's no variables at all on the ARK chart. There's like nothing. There's no bullish divergence. There's no patterns. There's nothing. And all you have is this. You could call that like a C setup. Why? Because there could literally be just like a 50% chance it holds this level. But here's the thing. If you set up your reward to risk like this, right? And you go like this. Let's say 3 reward to risk. Let's say you took 3 trades like this in a row. You took 3 trades where it was literally a coin flip's chance of you being right. But you set up your reward to risk, and the fact that on the trades you were right, you made a lot more, and on the trades you're wrong, you only lost a little because you're buying it right at the support level. Even if you only won one of those 3 trades, you still could be in profit because of that 3 reward to risk, or however you want to change your reward to risk and the quantity of trades you take. So that's just a little like of how I go about like the swings, and my mindset behind it. But it's always different. Every single swing is its own swing. So I just try and kind of like separate them in terms of like confidence levels. But of course you can always think about it. But when you're trading enough, it becomes like a lot harder to like really give each one like a specific, like, okay, this is like a 70-80% chance. Like, it kind of just gets mixed up when you're trading like at a certain amount. So yeah, let's keep going with the ticker requests. These are in my watch list. Hit the like button if you didn't already, please. Or don't, it's fine, I guess. All right, so let's get started. Bank of America, we didn't look at this one when I was looking at the other banks because I don't believe that they report tomorrow. Over here it says October 17th. But the chart is pretty interesting. $30, you've been kind of putting in these lows over here. Another one with the huge bullish engulfing candle today. Potential like double bottom if this holds and you start reversing. I don't know if there's much else apart from that. Just really, this is the major level. Hopefully you hold it. MACD is getting closer towards green. That's interesting. And you have some classic bullish divergence on the RSI. ORCL, dragon pattern. It already kind of broke out today. Hopefully you can just hold these lows around 60-ish. It's a very key level, $62 pretty much. This whole entire zone over here, 60 to 62 bucks. Very key level. You've got some hidden bearish divergence potentially if you start, losing momentum. And these are a couple other levels to the upside. Pepsi, this is approaching resistance. It's kind of just like a range, I guess. just kind of in this range. It's towards the top of the range. That's literally about it, but this is a partial decline. So if you really get up towards like this breakout area, there'd be a 70% chance of this range breaking to the upside, because the bears were not able to bring it all the way back down to the bottom of the range on the most recent wave of the pattern. TSM, that bear flag played out beautifully. Wow. Classic bullish divergence. Didn't really touch 60. That's a more technical level because of this high from January 2020. Apart from that, there's really not much. Like, you could probably draw a supply line here, which you're well under for right now. It's like a descending grounding wedge. AMC at the bottom. We looked at this last night, and look at this. And I said, like, you could kind of feel a little bit more, but look, 522 is the big support. You're in the wedge. I just couldn't like speak there for a second. Classic bullish divergence, so close to bullish engulfing candle, but the variables are starting to really align for AMC. Yeah, that's triple classic bullish divergence on the 4-hour. These are the times that really make me excited, because almost all the charts we looked at tonight had like bullish divergence or a support or a wedge or a harmonic. Like, no coincidence that these are all happening at the same time. And again, a lot of times when we have all these charts lining up at the same time, they all move together. Not all of them, but most of them. So hopefully we can keep these variables, and it's not just a quick dead cat bounce and we lose the variables in like 2 days. This just looks like a complex range to me over here on IONQ. Bullish engulfing, classic bullish divergence. Hopefully can hold 463, literally another chart. LAC, bullish divergence, bullish engulfing. Again, you see the word bullish here, go look up a textbook bullish engulfing candle. I keep saying bullish for all these charts because you literally just got the bullish variables today. So huge shift in momentum. I'd say 19 is a clearer level of support. These are a couple more levels. That's really about it. So we'll do Apple now, which will be the last one for tonight. On the 4-hour bullish engulfing, it's breaking out right now out of this supply line. So Apple is currently breaking out. This is a bullish Gartley. We talked about that last night on stream. Hidden bullish divergence, bullish Gartley, bullish engulfing, wedge breakout, kind of a double bottom at a major support level. Wow. This is a beautiful chart. Not in the fact that it will 100% continue to go up, and the fact that there are so many variables, and if it doesn't go up, the area of risk management, not financial advice, is very clear. It's if you break that low, rest in peace to all the variables. If you continue to hold that low, these variables have a pretty decent chance of playing out until the variables change, which they will in the future. When you just start looking at charts like that, it just really changes your perspective. It's not about always being right or wrong, or it's not always about being right. It's about always having variables that you can trust and understanding if they don't work out, you can just move on to the next one and not have a big loss because of it, because you're not going all in. Just because this looks like a beautiful chart, that doesn't mean you go all in without a stop loss. Because you can start doing that, you can win 9 trades in a row, and then the 10th trade, it gets you, and then you lose all your profits. So it's good to call charts. It's okay to call charts beautiful. It's okay to be confident in charts going your way. That doesn't mean you have to change your position sizing and take out your stop losses and trade any differently. It's fine to have those opinions in your mind because there are an increased amount of variables, but it shouldn't change your execution. There's a difference between analysis and execution. That's why a lot of these funds have branches for analysis and branches for execution, and their traders executing trades might not even be doing the analysis on those trades, right? Some people are better at certain things, others aren't, and that's okay. But if you're going to be trading by yourself, you're your own boss and employee, so you need to be able to do both and set rules for yourself and follow the rules. We talked about this on our call, when was it, Tuesday or something, in Champ Circle? We just talked about this. It's really a formula that you have to understand if you want to do this by yourself for a long period of time and make it a sustainable way for you to make money. So we'll leave the stream on that note. Thank you for watching the stream. Hit the like button, hit the subscribe button, premium sale. If you're interested in more stuff, like all this stuff on the stream, if you want to dive in deeper, I have a premium. It's the first link in the description. It's a pin chat, 10% off for the rest of the month. If you're interested in that, when you go to the sign up page, there's some more explanations and stuff. You can see all that. And there's like a video that explains it further on that as well. So check all that out if you want. Hit the likes. Timestamp should be up soon. Peace out. Have a good weekend. See you next week.